92% of actively managed mutual funds underperform a basic S&P 500 index fund over 15 years. That includes funds run by teams of PhDs with Bloomberg terminals and decades of experience. Not some of the funds, almost all of them. The boring fund wins. Here's why. An actively managed fund charges you on average 1.1% per year. An index fund charges you 0.03%. That gap, 1.07%, does not sound like much until you compound it. On $200,000 over 30 years, the fee difference alone is $210,000. You paid for underperformance. An index fund does not try to pick winners. It owns them all. When the market goes up, it goes up. When the market goes down, it goes down. It does not try to time anything. It does not need a research team. It does not trade. It just holds. And holding turns out to be the edge. A Harvard MBA enrolled in a growth fund in 1995. The fund had a star manager, a great track record, and a 1.4% fee. By 2015, the fund had returned 6% annually. A simple index fund over the same period, 8.2%. The MBA paid extra, tracked quarterly, worried constantly, and still underperformed, doing nothing. Here is the myth. Index funds are for people who do not know enough about investing. The professionals know better. False. Warren Buffett's standing instruction for his estate, 90% into a low-cost S&P 500 index fund. The professionals know exactly how hard it is to beat the index. That is why they recommend you do not try. Myth busted. The 3-fund portfolio. Fund 1, a total U.S. stock market index. You own all of America. Fund 2, an international index. You own the rest of the world. Fund 3, a bond index. You own stability. Rebalance once a year. That is it. No research required, no CNBC needed, no predictions made, just the market working for you in the background. Less research, lower fees, better results, less anxiety. These are not trade-offs. All 4 happen together when you stop trying to beat the market and start participating in it. Boring is not a consolation prize. Boring is the edge that compounds for decades while everyone else is busy watching tickers. Check your current fund expense ratios tonight. Log in, open any fund you hold, find the expense ratio number. Anything above 0.5% deserves a question mark. Subscribe for more Cashflow Clarity Season 2. Next, the emergency fund structure that earns while it waits without